Joining us now is Nathan Sheets. He's PGIM Fixed Income Chief Economist. And Nathan, it's good to see you.
Good to be here.
All right, let's talk about this. Do you think 2% is the best we can do in terms of growth in the United States?
So 2% is a good benchmark for thinking about growth over the next year and beyond. I continue to believe that there is some upside to that. And the kinds of policies that President Kaplan mentioned, infrastructure and the like, would be very constructive. But more eminently, this has been a one-engine expansion in the United States, where it's been the consumer. And at some point, are we going to see more business investment? And I think this is why it's so crucial that we get some resolution on the trade front. The corporates aren't going to invest when they don't know what the international picture in terms of openness and trade looks like.
You know, corporations have been sitting on their hands to a certain extent, but
Yeah.
Is there a point where they just have to say, okay, we throw in the towel, we're going to go ahead and invest because there is demand here?
So we haven't seen that point yet. I was hoping that they would reach that point, and they haven't. And to be clear, I would say through this cycle, business investment has been slow. It's been lackluster. It hasn't been terrible, but it still feels, given the strength of corporate America, that there is another cylinder yet that could kick in. But their financial resources are using more for share buybacks and maybe to some extent for acquisitions.
Steve, you have a question too?
Hey, Nathan, I want to do a little simple math. First of all, I think the politicians, they do what they have to do, which is they talk about growth in round numbers, but economists don't have to do that, right? So 3%, 4%, 5%. If we could do 2.5%, that would be a pretty big victory in a developed economy like the United States. So if I get rid of the trade problem and I allow the benefits of the corporate tax cuts to play through the economy, can I get to 2.3, 2.5, and what kind of improvement would that be to the U.S. economy?
I think that is exactly the dimension of improvement that's plausible. That if we got some more investment, is that going to take us to 3? I just don't see it.
That's tough.
But as you say, 2.3, 2.5, something like that, and you aggregate that up over a decade,
it's money.
It's significant.
It's real money.
Yeah.
What about the risks that Kaplan talked about, this corporate debt issue? He said the nation essentially is over-leveraged. What's your take on that?
So I believe the consumer sector in aggregate is in very good shape. So that's an important caveat on this. There are some leverage issues in the corporate sector, particularly in the BBB space. But our sense is that these firms are largely BBB by choice. They've made decisions to put the leverage on their balance sheet, and many of them are working off that leverage. And as a result of that, the high-grade investment returns this year have been on fire as these firms have improved their leverage picture.
Nathan, you said that the trade war is something that's looming over corporations, but we've maybe taken on the Chinese in a way we haven't in the past. Do you want to see that just tamped down so that corporations will spend, or would you like to see, if we push it a little longer, if we actually make progress on that front and reach a fairer agreement with the Chinese?
So I think it would be wonderful if we could reach some kind of resolution on these issues with China. These are issues that we've been negotiating with the Chinese for the last decade plus. The question is whether this vigorous trade war that President Trump is pursuing is the best way to get that outcome. And I would say the alternative would be a multilateral approach. The complaints that the U.S. has with China, many other countries have with China. And let's use that multilateral leverage and do it in a coordinated way to press the Chinese to make these necessary reforms. It's just not clear that he's getting any more traction than anyone's ever gotten before.
Let's talk a little bit about what you've been hearing, not only from Kaplan today, but also what we heard last night from Jay Powell. It sounds like they are in a big way trying to hand off the baton to say, OK, Washington, Congress, it's your turn to come up with some sort of way of funding the economy from here?
So I broadly agree with Powell's characterization that the glass for the economy is more than half full. This is a good economy. The fact that we're still growing at 2%, we have a low unemployment rate, it's the 11th year of an expansion. There's a lot to like. But there's also more work to be done. And I think the Fed's right. The Fed has cut rates. It's moved policy to a stimulative position. Monetary policy is appropriate. And now we need trade policy and fiscal policy, which I'm not exactly sure what fiscal policy looks like right now. I'm not saying that we ought to have more spending, and it may be that what we do is we need a strategy for longer-term sustainability. And that may involve over time, even some increases in taxes. But there is fiscal work to be done. It also involves infrastructure, as we've mentioned.